Hey, it's Scott Garlis at Stansberry Research. I'm here at the 2019 Alliance Conference in Las Vegas. I'm with Grant Williams, co-founder of Real Vision Group and author of Things That Make You Go, Grant.
Good to see you again.
Good to see you as well. Thanks for your time.
You're welcome.
So, first question, do you think China and the U.S. will work out a trade deal near term?
Well, yes, no, yes, no, yes, no, no, yes. I mean, look, it's amazing. It's such a high-stakes game of poker now. It's in everybody's interest to get a trade deal done, but it's in nobody's interest to lose any face at all, and that makes it really difficult because, you know, in Xi and Trump, you've got two guys to whom face in Trump's case is all important, and in Xi's case is absolutely crucial. I mean, he cannot afford to lose face. So I suspect they won't get anything done. I think it's just going to be too hard, and the closer we get to the election, the more I think the power dynamic shifts, and the Chinese probably realize that they've got Trump over a barrel because he's really going to need that trade deal. The only caveat I would say is that the Chinese economy seems to be deteriorating pretty rapidly. So it's having an effect. How much of an effect, we really don't know. Despite the bad headline numbers, it could be a whole lot worse underneath the surface. But I don't think there's a trade deal getting done anytime soon. We may get, you know, a few more carrots thrown out and a few more breadcrumbs thrown that we can all follow and to make the markets go up, but I don't think you're going to get anything comprehensive done in the very near future at all.
Any shot we get at least, okay, we're still working on things?
Oh yeah, you're going to get that every time the market goes down 1%. You're going to get something. You know, the trade delegation's coming back to Washington, or we had a very great phone call with, you know, Xi and I last night, and everything's going great. You're going to get plenty of that, and it's amazing actually the longevity of the effectiveness of those kind of announcements has just baffled me, frankly. The market still laps it up every single time, so I'm absolutely certain that we are going to keep getting positive commentary from the cuddlers of the world and Trump himself, but I don't think they're anywhere near getting anything done.
Very fair. And then, so we've seen protection premiums going up of late. Do you think the market is pricing in no deal?
I think it's beginning to price in a lot of things. It's beginning to price in recession risk effectively. It's beginning to price in a return to volatility. It's beginning to price in a no-deal Brexit. You know, there are all these things that have been happening for the last couple of years, which we all kind of say, well, why has this not affected the marketplace yet? And you are starting to see that creep in to vol, and you're starting to see people actually do something about it rather than say, well, we need to think about taking some hedges. It's happening, and the danger is that it happens fast and it explodes to the upside because volatility begets volatility, and it's been suppressed for such a long time now that if it does start to move, it becomes a catalyst in and of itself. So it's something I'm watching very, very carefully, and I think everybody should pay attention to the perception of risk because look at WeWork. It's just a change in perception is all that matters. This thing went from a $90 billion company to essentially bankrupt in 3 weeks. Nothing happened, but the perception changed. And so I think, as far as volatility is concerned, if people's perception of the risk there changes, things could get messy pretty quickly.
Yeah, I thought the ISM data that came out recently was very telling of what's going on in the U.S. economy now too.
Well, not just here. I mean, we had it in manufacturing, we had services, we've had it in Germany too. You know, the terrible readings in Germany, poor readings actually this morning out in China. Everywhere you look, there's plenty of evidence building that that the global economy is struggling. People are saying that that's a function of the trade uncertainty. They're saying it's a function of Brexit. But the really worrying thing is it's just a function of this being the end of the cycle. And it's been one of the longest cycles in history. And so maybe a trade deal doesn't fix what ails the global economy. Maybe a Brexit compromise doesn't fix the problem. And so, you know, the data suggests, again, people should start to at least think about, are we at the end of this cycle? Because if we are, a lot of things are going to have to change.
I think this is very fair. How long do you think consumer confidence can hold up in this type of environment?
Well, again, the data suggests it's falling already. It's certainly falling outside the US, and it looks like it's starting to fall here in the US. And again, I mean, this is the incredibly important thing to understand is the fragility of all of this. It is perception, it is confidence, it's ephemeral things that you can't measure. It's not widgets being made, it's what do people think is going to happen. And the more we do have uncertainty, and the more they read headlines about poor data, and the more they see Trump and the Fed fighting, and they read about for the first time in a decade, central banks going their own way and doing their own policy and beggar their neighbor. The more they read about the dollar crushing profits and hurting other, the more this stuff happens, people just start to lose faith a little bit. And if they start to lose faith, they tend to take actions to protect themselves, and that does not mean piling money into the stock market, right? It means taking money out of the stock market and putting it in cash and gold. And do you put it in bonds now? Tough thing to do at these prices. So people have a lot of decisions to make. There's no shortage of noise through which they've got to kind of see to find out what the signals are, and it's not an easy time to do that. I mean, it really isn't. Everybody needs to do the work and sit down and think about this stuff, and not just wait for the market to tell them what's going to happen, or I suspect a lot of people are waiting for the all-clear signal to sound again, as it has done repeatedly over the last 10 years. But what if it doesn't? At least do the thinking and have a plan for that.
And then lastly, so we've been seeing a bunch of monetary stimulus coming in markets way through central banks. Do you think the pending fiscal stimulus is going to help make things worse?
Well, this is, I guess, going back to what we've talked about here in terms of perception, this has been the $64,000 question for the longest time. At what point does central bank stimulus and forward guidance and jawboning and talking about lower for longer with rates, at what point does that stop placating everybody? At what point do people suddenly start saying, I don't know that you've got that? Because if that happens, if never mind faith in the economy, never mind faith in the trade talks, if faith in central banks starts to evaporate, the problem becomes much, much bigger. And you can switch to fiscal stimulus, which they're probably going to have to do. But again, as soon as you do that, you start to focus on the cost, you start to focus on who's going to finance it, and more importantly, at what level. And where rates are right now, it's going to be tough to fund any kind of meaningful fiscal expansion without seeing people want a bigger return for their money. And again, that is a problem that's been created through this lower for longer, through this reliance upon low interest rates. If rates start going up at this level, they really don't have to go very far to cause problems very quickly. So none of this is new. We all know that we're in a very precarious spot, and we're kind of fumbling our way through it. And a lot of people will argue that we'll keep fumbling our way through it, and we may. I doubt it, but we may. The question is, if we keep fumbling through it, you don't really have any decisions to make. What you have to do is think about, what if we don't? What if all of this stuff does come together all at once? What does that mean for my portfolio? What does that mean for the way I'm positioned? Do I need to make adjustments to that for that eventuality? And I think right now it behooves everyone to at least do the work and think about it.
Agreed. It's the quiver's running out of arrows.
Yeah, exactly
fast.
right. Exactly right.
Very
See,
fast.
you just summed up 5 minutes in one pithy phrase. I wish I could do that.
Thank you very much for your time. Always a pleasure.
Thank
Certainly.
you. Cheers.
Thanks for watching. Stay tuned for more updates.